Indicators in systematic trading. Well, this is an interesting topic. You find other videos in our channel about this, but I'm still asked about that. I'm Andrea Unger, and I'm the only 4-time World Cup champion in trading with real money, so far at least. And that's also why many people think that I use plenty of indicators in my models. You know, I build automated trading systems, and also at the beginning of my career, I also thought that indicators would be the answer to building systems. I obviously started reading a lot about technical analysis, and in technical analysis you get many indicators presented in a very convincing way, with explanation and theory, many things that convince you that that indicator makes sense. So I thought that putting together many indicators in the best way possible, I would get the best system ever. I was not really modest, I was not humble at that time. I really thought that I could generate the best system that ever exists, just putting together indicators in a very clever way. And I'm still looking for that. I never found it. I came to the conclusion that that is not the way to go. And I'm still convinced that it is not the way. Even though I never drop studies, I still look into stuff, and if tomorrow I find a way to use indicators the way it's suggested to use them in technical analysis, I will for sure tell you and let you know, because I will be happy to discover a new way to trade the markets. As of today, I've not found that. I started putting together stuff, stochastic, MACD, moving averages, RSI, a lot of stuff, and nothing came out. I was just putting together conditions, getting a heavy code to test, and getting something that was canceling a lot of trades from basic models, but nothing that showed convincing results. It was frustrating, believe me. It was frustrating. And then I arrived to the moment when I developed the Unger method as you know it. Very basic setups, simple setups, buy here, sell here, where here is high of yesterday, or the high of today so far, or the high of the last 5 days, and sell here the low of yesterday and the low of today or low of 5 days ago, and whatsoever. And exit here. And here might be the end of the day, a period after a couple of hours, a couple of days, or a profit target, or whatever. But very, very basic and simple rules. But believe me, those rules for the first time showed me profits in my trading systems. So now came the time where you got the revenge of the nerds, I got the revenge of the indicators. It comes the time where you could imagine to even use indicators, but not as a setup, as the model to generate trades. But at this stage, on my basic model built with the Unger method, I could add indicators to filter trades to get the best trades possible out of all the trades that my basic model generates. And here, indicators can help because they can define certain market conditions that are more in line with your model. It's not a mystery, my favorite indicator for this kind of stuff is the oscillator, the ADX, average directional indicator, and the ADX not calculated on 14 bars as default normally presented, but on 5 bars, 5 days normally. And this with filtering trades when it is allowing trades only when it is below 40 or 35 enormously helps in trades at breakout. Breakout entries are really credibly improved by the filter of this indicator, just because it limits all the situations where we have excessive acceleration in the market, which leads probably to tired entries. So if you entry only when it is below 40 or 35, when you have a situation which is a bit more quiet, let's say, and you get a big advantage when the move starts. This is just an example. I also used in my trading other kind of filters. One astonishing is the moving averages. I thought, still think that it could be a good idea, that, for example, intraday trend following strategies on a market. You enter somewhere and then you exit at the end of the day. So my idea was that if I took these entries only in case the close of yesterday was above, let's say, a 20 days moving average, then I would have an advantage because I was in a short-term uptrend and my long entries would have a better chance to end up as a winner. A strange thing, that was not always true. Sometimes it worked, sometimes it did not work. Sometimes I got the exact opposite results. Long entries work better if we were below the 20 days moving average, which is weird, but it works so. So the moving averages might be tricky. And this sort of puts in a strange light all the trios about price action and so on, where you often use to build your entries on medium-term, short-term moving averages and so on. So where are we and so on. But I can tell you, not always you get the same exact message from filtering trades with the moving averages. The reason might depend on the basic model you use. Some models might have a better edge when you are in the opposite market condition, because these entries might just catch some rebound or some retracement. So you need, for example, a short-term downtrend to ride an up move for a couple of hours, a day or so. So be careful when you use moving averages, because the intuitive use of them is not confirmed by the tests. And the tests are something that, in my opinion, rule, because they tell you what really happens on the market. Other indicators that I happen to use sometimes are position indicators. For example, I used, that was frustrating, Fibonacci levels. And with Fibonacci levels, I was never able to get any decent strategy. Not using them as support or resistance to rebound, not using them as levels to break through to get something. Never, ever, anything. By the way, to use Fibonacci levels or any level as support or resistance is really challenging to program in a software, because obviously the markets will never exactly touch the resistance level or the support level and then do something, okay? If they really have to turn around, they will do so in an area or neighborhoods of this level, not exactly on the level. I mean, 1 tick above, 3 ticks above, 2 ticks below. It doesn't matter, just somewhere around the level, if the level works. But it's hard to compute this, it's hard to code this in the code. It's hard to tell the machine around the level. This around is not easy to code. I mean, probably now some expert will say, oh, this is a bullshit reader and so on. No, okay, I'm not a programmer. I'm trying to keep things simple and to promote simple stuff. So if you go for simple stuff, to get simple setups, simple strategies and so on, believe me, to program action on a specific level is not something for you. Not for me, not for you. That said, Fibonacci levels never showed me any decent reaction of any kind. Different story are the Bollinger Bands. Bollinger Bands with a standard setup, 20 periods, 2 standard deviations. They are something I like to use on counter-trend strategies where I find inversions of the trend of a market around the Bollinger Bands levels. So normally I work on 30-minute bars, and if one bar closes, for example, above the upper level of a Bollinger Band, and the next bar closes below the upper level, so it goes back inside the envelope, then I might enter short, because I believe there is a downtrend to start. And the same thing on the lower level, when it closes below and then it comes back again. And this is something I could use. But believe me, not necessarily the Bollinger Bands are the best choice. I mean, they work, they do work, but if you use, for example, high or low of yesterday, you have a similar effect. So it's not the secret behind the Bollinger Bands. The difference is that the Bollinger Bands are not constant during the day, they change every bar, while the high of yesterday, of course, will be the same throughout the day until there is a new day. So you have a fixed level opposed to a moving level. And that is something that some people might prefer, some people not. It doesn't really matter. But Bollinger Bands are something decent. I build them on 30 minutes, and this is something I already explained in another video. Indicators, if you really want to use them in your training, should not be used on too small time frames. 30 minutes is, in my opinion, the limit. Maybe 15 in some cases, but don't try that. It's funny how some people come and try to promote stuff where they use MACD on 1 minute bars. This is ridiculous, believe me. It's ridiculous. Now, indicators are built on the close of a bar, and 1 minute bars are short. Now imagine, the close of a bar might change. Noise in the market, 1 tick above, 1 tick below. But 1 tick on such a small bar is something. It has certain importance in 1 bar. While 1 tick or 2 ticks on a 30-minute bar, big bar, that's something that is nothing, okay? So obviously, the larger the time frame, the more important the information you get out of the indicator, because you clean up all the information from noise which is present in the markets. But that said, you can use them. So indicators, yes or no? The answer, maybe. It depends. Indicators to build setups, to define where to enter, how to enter, no. Don't try this at home. I can tell you, this is not the way to go. I doubt you can find anything decent doing so. Basic models, maybe with the Unger method, and then you use indicators to filter trades, yes or yes-ish. In some ways they can work. ADX is fine, Bollinger Bands as levels, they might be well. Moving averages, be careful if you are at your start in your trading career as a systematic trader, be careful because the information you get is not what you are looking for. But generally, yeah, you can try something, but only to filter. Use basic models, simple models, and then if the basic model shows promising results, it's not losing, then you can try to filter the operations of this model with something and also eventually with indicators. I'm still looking for a solution with indicators, and believe me, if tomorrow I'm finding it, I will let you know, because I will be the first person among you all to be happy about that. I doubt I will, and not because I'm stupid, I might be stupid as well, but I really believe that that kind of solution is not out there. So I will be using indicators only as filters for the rest, probably for the rest of my trading career. That's it, guys. I hope you got some good edge from this, and if you find something, please write it down in the comments. I'm happy to read it. I'm happy to exchange information. We are here just to help. And happy trading. Ciao from Andrea Unger.